Good morning, everybody. This is Dennis Wilson with the Active Trend Traders. Welcome to the How to Make Money Trading Stocks webinar. We do free every Friday at 11 a.m. If you happen to miss the actual live webinar, you can pick it up within a couple hours after the webinar is over, once we get it posted and put on to YouTube and also onto the internet, onto the website. And so let's get going. I've got both mics are out and about today. One is over in Half Moon Bay. He's enjoying the cool weather over there, and Michael Bischoff's on another holiday to go see his mom and dad this weekend. So I want to remind everybody that all the materials that we do share with you are for training purposes only, and the trader should always paper trade any new method prior to the risk of their own personal capital. There's Mike's disclosure. And as I say every week, basically is the active trend trading system. I like to help folks learn. And with the emails that I get from folks, talking about different trades and all that kind of stuff, it's clear that, those that are, jumping into the videos, the training videos and all that kind of stuff are making really nice progress with their trading. And that always makes me quite pleased. This coming Wednesday, I will be back in Hawaii, which I'm very thankful for because it's starting to get cold here in California. But next Wednesday, October 5th, what we're going to be doing is basically the training we've done for about the past 2 months that we put together and just solidify the active trend trading system for everybody. We're going to be basically going in and talk about, okay, now that we have all the pieces, let's pull together a strategic plan. We saw some of that strategic plan in working with our most recent Juno trade and then our Nugget trade that we did earlier this week. And so a strategic plan, and then just how, putting it all together. And that's what we're going to be working on this coming Wednesday night. And then we will basically just, build on top of that. Between now and the end of the year, I'm going to pull together and get all the training lined up on the website for premium members so they can go and get the training. But then we can focus our normal Wednesday nights to a briefer training period, but more involved in selecting some stocks to be either to trade one of the three strategies on. So this week, the as we were sitting here last week or watching the market react to the Fed not taking the action to raise rates. And what do we see this week? Basically, we saw big daily ranges with little progress. We were making a lot of significant changes. As you can see, the market was down hard yesterday. All the indexes were down hard yesterday. They're up nicely today. However, each one of them is working still within a pretty solidified high-low range. So the S&P remains the weakest of the three tracking indexes. And, my big question, as I had last week, my big question was, is there enough oomph to take the, is there enough momentum to basically push it through its yearly highs so it can get back on track and back into a nice little upswing and up into a slight uptrend. As I said, the big ranges, little progress is equal to just churn, in other words, noise, and that shows indecisions. NASDAQ, yeah, we went up and hit the new high last week, and then it's been working over the last few days to try to get back to that high. Russell attempted a breakout, fell back down into its range, and we would think that with low rates, the Russell should be kicking into gear to move on up. But there's just a huge amount of uncertainty out there. As we saw on Monday, the market was down fairly significantly. However, some say that was due to the upcoming presidential debates that evening. The presidential debates provided really nothing new for the market to kind of like use as a foundation to launch from. And so we just been getting the back and forth. The U.S. election, of course, is coming up first part of December, on December 8th, which is actually my birthday. Haven't had a presidential election on my birthday for quite some time. Foreign banks, I don't know, some of you may have saw a brief story I posted about a guy, an analyst at Morgan Stanley, talking about what is currently holding up the U.S. stock market, which is basically foreign banks, and what the Fed is doing. But with regards to how the economy is doing, it's a little bit wobbly. How many have been following the Deutsche Bank fiasco? That's what's been going on with Deutsche Bank. Anyway, it is a drag, because how's that going to work out? Is that going to be, is that kind of like the straw that makes the camel's back, and really impacts the German economy, and therefore then the rest of the European economy? I wish Michael was here today to kind of talk to that. And then, are there clues that maybe a year-end rally is starting a little early? I'm not too certain about that. And kind of my vision on where the market's going. And it almost changes on every 2 or 3 days, because I think it's going to break out, but it doesn't. It falls back down. I don't really think it's going to fall dramatically yet. I think there's too many things propping the market up. However, one of the scenarios that's been going around in my head, the scenario that's been going around in my head is, okay, the Fed is going to do everything they can to keep, to pacify the markets up until the election. But then after the election, regardless who wins the election, what's holding then the Fed back from raising rates in December? And we know what happened the last time when it raised rates last December. It sent the market into a tailspin, which was kind of an exciting time. Gave us a really good reset, actually, to go in and for some nice profits to the upside, but they were capped. There was a limit to the upside. And so that's some of where I'm kind of looking, posturing myself. But regardless of what we think over here, it's the charts that we have to actually be trading off of. Karen brings up a very important point with the indexes today. What we're seeing is some of what we're seeing regarding buying and all that kind of stuff could definitely be directly related to the end of the quarter, end of month, window dressing, as the institutions and the portfolio managers bring their portfolios into balance with what they say they're going to be trading. In other words, if it's an S&P portfolio, they have to bring themselves into balance with the S&P and this type of thing. So that's what we may be seeing as of today. So as Mike and I have been chatting and talking about this particular percentage stocks above the 20-day moving average, really nothing to do and or see when it's stuck in mid-range right here. We're primarily looking for when it gets down here below the 30. But as we can see, the S&P this is Spider as the stand-in for the S&P, is kind of rallying back up, but it's approaching, this resistance up there about 216, 217, which relates to, approximately the 2170 level on the S&P. We have these highs back here, and so nothing really here to go, okay, hey, we're in good shape. One of the things that is kind of interesting, this is a daily chart, is how we've got a nice little floor building right here underneath all these lows. And so since it's hit that so many times, this is an important level, along with the fib levels and everything like that that we've been talking about on our Wednesday night trainings. So as I said, nothing really, to write home about here. We're just mid-range, and we'll see if there's enough oomph to take the S&P back up into its prior resistance levels, and then enough oomph to then break out through that. That would be good for the people who are bullish in nature, and again, maybe one of those things we see prior to the, prior to November, because I think after November, when all the, when all the knowns are known about the presidential election, there's not a lot of reasons why the Fed, the Fed isn't constrained in doing nothing anymore. Okay, same index, the percentage of stocks, but they're above their 200-day moving average monthly chart. One of the things that I highlighted last Wednesday night as our training, and it appears that this is going to be the case, is it appears as if this month, the percentage of stocks above the 200 is going to actually be contained within last month's candle. Now, typically an inside day or an inside month or whatever period you're looking at, this candle completes today. And it showed us that even though, just like the markets, the index over the last month has not made a lot of progress. It's basically been here between about 2,100 up to, up to about 2190-ish. And so it's been contained just like this candlestick has been contained. And so, we've got, more stocks have got to get involved in order to push the momentum, to push the market up. If this inside month is a precursor to weakness like it often is, not always, but often is, then it may just continue to drive sideways here, and if the S&P does push higher and this just drives sideways, that's telling us that fewer stocks are actually participating in the upside, or if this drops off a little bit and this presents higher, then that would be a fairly significant negative divergence that we could look at, later, for potential movement in the market going into the later part of November, December timeframe. Okay. So here's where the markets were as of about 9 o'clock this morning. The Dow up for the year. Russell up for the year nicely. However, the Dow and the Russell have still not regained or hit their highs from last year. And so let's look at the charts. So daily on the left and our weekly on the right. We'll start with the S&P. So as we can see, the S&P is, these moves off the S&P. Here was, I want to say this was last Friday when we started a sell-off. Thursday we had gone up, hit our head up into the resistance level from the past highs, reversed back down on that. And this was Friday, then Monday, dropped, almost to the 618 retracement level. Tuesday, Monday, Tuesday, Wednesday, okay, Tuesday we did hit that level. It rebounded, pushed back up. However, one thing you can notice is the push back up did not get back up into these prior levels. However, then we got a good sell-off yesterday, right back into the retest, and a rebound right back up today. And as Kieran said, This may very well just be window dressing for going into the end of the quarter, into the month. I am not, those of you following the strategy 3 for both Tesla, Spiders, and Nugget, I'm not in a huge hurry this weekend to open up additional positions on any of those, and uh, may let the quarter go ahead and end today, evaluate over the weekend, establish my new limits on where I think it's going, and then plan the trades going into next week. That's most likely what I'm going to do. And so, as you see, we fell below the. It was so funny. We fell below, sliced through the 8, 20, and 50-day moving average, stopped just short of the 618. Rebound today, gapped up, and is proceeding to push its way higher. Good resistance back up here at the 2179, 2180 level, and the upper resistance up here at 2193, which is from the highs made earlier in the year. We'll see if we push all the way up into these areas. If I'm going to go back on what I had said earlier, if our prices do in fact get up here by the end of the day up into the 2175 to 2180-ish, I may lay on just a couple of like the 217 calls, short those going into next week's. But I'll wait that, I'll wait on that because I don't have to be in a hurry to get those trades in place. So on the weekly chart, basically we've got 3 good weeks of upside, and this week may be more positive because looks like we're closing, pushing to close closer to the top of the range that we were at this week, and so that's a positive aspect. Excuse me. Get a sip of water here. Okay, let's go on over to the NASDAQ. NASDAQ, as we've been watching the NASDAQ, it has been the strongest of the 3 tracking indexes that we track. Here was the one-day reversal. After all this noise over here where it fell, this was noise. This was on a Friday where the Fed was making noise that it was going to raise rates at the September meeting. Then on the following Monday, another Fed president came in and says, well, wait just a second. We probably aren't going to. We're going to, be cautious and all that kind of stuff. And then we rallied from there. Turned out to be, if you were an early warning alert trader, we got in this very next day and rode on UPRO. We rode that up for about a 6, 7, 8% gain, and then got stopped out of that, which is fine over an 8 to 9 day period. The NASDAQ, again, it basically pulled all its moving averages up, and it, as you can see, since it broke through the 20-day and the 8-day, the 20-day has worked as a really nice level of support for the NASDAQ. The challenge in trading the NASDAQ is just basically the formlessness of these particular, candlesticks. So big gap down, push up, hanging man, drop, gap up. It's challenging to plan trades around those unless you go right to the moving average itself. Looking very positive on the weekly chart. Here's one thing that is of concern in watching the weekly charts is as we're pushing up towards a new high here, look what's going on with our True Strength Index. It is not pushing to a new high. This could set up, even if we push on through and go to higher highs, this could set us up for a real nice divergence for a move down later in the year. Second thing also, last week of the month, and as you can see, even though from a monthly candle this is very positive, the momentum index has not moved up at all. We've had basically a sideways move on the index, a momentum index on the weeklies, and just a little bit of a sideways move here on the true TSI, which also is an indication of just indecision, of churn. We really haven't got going, as you can see over here, we haven't really gotten going back into a trend that has been sustainable yet. May still happen. We'll see. There we've got the Russell. Russell is kind of sitting in the middle between the Nasdaq and the SPX as far as the best strength. We popped back up above the 8 and above the 20 and the 8-day moving average. Still haven't really taken out this level of resistance here at 1255, 1256, and then of course to retake its breakout move, it's got to get up here above the 1260 level. From a weekly perspective, similar type things over here. The divergence is a little bit more pronounced, but we definitely know where the resistance is, and right now, if it closes right where it's at, it is right at a level of resistance that that is keeping it from going up and challenging its all-time high from last year up here at the 1296 level. But at this particular point, excuse me, I'll be looking at, I would like to get a more uniform kind of pullback rather than this herky-jerky type pullback where it was nice and smooth, and put it, maybe give us a small bodied candle to plan a trade off of that. Barry, this is the 2000, Russell 2000. Okay, so that's where we're looking. Let's see what next week brings. Simply because we could see, we've definitely got a really well-defined, and I would suggest doing this on every one of your indexes, is basically just lay in where your support, where your resistance is, and then watch for the move inside of that. I would also run a fib from here up to the past highs, which is about there, and use that as a potential breakout area. If it breaks out above that, then that could be we could then measure to see how far that was going to go. We can lay in a fib extension on top of this for those who are on the Wednesday night call from here to here. And that's not the way I wanted it to go. It is from there. Hold on a second. Go back over here. I guess sometimes you have to run the reverse fib retracement to get to where you're going. So from about there down to there, and then that will give us a new projection on up where, the 1236 projection up would take us about 1279, and the 1618 would take us just above that 1300 level, which was its past high from last year. So that is a fairly strong level of resistance, but also can be a target if we break out this 100% level. Okay, any question on the indexes, folks? Okay. So with that, so path of least resistance as we see it. What I'm going to do this week is rather than saying, okay, here's where I think things are going, I think that, the NASDAQ, its path of least resistance is up. That should be a NASDAQ. And I would think that the Russell would fall kind of more towards the path of least resistance being up to, sideways. And then on the SPX, I'm going to put it over here, is I think SPX is sideways to potentially down. But I think there's a limit to the drop. I think right now the SPX is confined within a fairly large range, trading range, and as long as it continues just to bounce in between there, it's basically not going to make a lot of progress. But if I were looking for pullbacks, I would look to buy the pullbacks in the NASDAQ. If you get a proper entry signal, the Russell would be next in line for the upside. And then the S&P, if these move up, but this really struggles at that level of resistance that we identified and really struggles there, and any weakness comes back into any new resistant or any new weakness comes back in the market, I look for the SPX to retreat more quickly, especially now that the financials are a little bit under attack. So Eric asked a question, what percentage of double bottoms make new highs? Eric, that's a really great question. And if it's a proper double bottom, oftentimes with the double bottom bottoms, you can't call them double bottom bottoms until they actually have, in fact, broken the middle section of the W. So by definition, they've made a new high. Well, a lot of people don't recognize that with a traditional technical analysis double bottom, it goes down like that, goes back up, goes up like this, is that the fall between here and here, for it to be a true technical double bottom, has to be 20% or more. Now, oftentimes you'll see a range bound where it comes in here and makes the bottom, makes the bottom, makes the bottom, but this is less than 20% to the middle section of the W, and then moves up, and that's more or less just called a trading range or a consolidation pattern. But as soon as you break, what percentage of them, I don't know what the percentage of them actually go ahead and break out through this area. All I know is that of the ones that they define as double bottoms, they've all broken out of this, because that's when you can start calling it a double bottom. You can anticipate a double bottom when it gets here and get this trade up to here. And a lot of people don't think about that, because that's a pretty significant move, 20%, which even if it turns out to not be a double bottom, it's still put a nice, chunk of profit into your pocket. I hope that answered your question. Okay, this week we've had a really good week. I'm pleased with this week. The Juno trade came back for us and actually went up and hit just about our 10% mark and then retreated a little bit. But also we got the Nugget trade in place. The Strategy 3 trades have been doing well. And as we push towards the end of the month, actually, I'm going to wind up today about $800 short of actually hitting, being back on my equity curve that equates by the end of the year to about a 40% gain, which is my target for every year anyway. It's not a guarantee, but that's what I target for the combination of the three strategies. And as you can see, the strategy 1 is now back in the green, and we want to add to that moving into the end of the year. Strategy 2 is doing fine. We had 70% of our funds designated in strategy 1, 10% of our funds into strategy 2, and then started out with 20% of our funds allocated here, up that to about 25 by the end of the, mid-year, and it's back down to about 20 since we closed out part of the Tesla trade that hit its 100% mark. And so, and speaking of that Juno trade, here's what took place. And here was basically the chart as of not quite the end of last week, but what we had was basically throughout the rest of the week. It went on up on Monday and actually gapped back up and got here up here. It gapped up above the 618 retracement and up to about 33. And I put a trailing stop on it that fell back below that 618 retracement, because it would have been fine if it would have been pushed on up here to the 100% retracement, which was our target. It fell back below it on 9/28, so we exited with a trailing stop at 32.18. Total profit on the total trade was a little bit over $1,000. And then here's the Nugget trade for strategy 1. Now this is a seasonal trade, and what we found with Nugget is as I went and started evaluating and analyzing what Nugget was doing, what I was finding is on some of these moves it was doing here, like that's about a 40% move in a very short period of time in the daily chart. Again, another approximately 35% move here. This move was about 28%. So I got to looking at this and I said, okay, is it giving us the signals where we can actually make the trades off of it? And it turns out that Nugget is a very pattern-oriented ETF. And so then the process just starts with, okay, wait for the patterns to turn up. And sure enough, I put out basically a guideline in the traders report or market report on the 27th, and I said, hey, let's watch this because we've got this trend line coming up here acting as support, and if the price action gets down in this area, and actually we sent that out, and basically if it gets down into that area, that was on the 27th, which is here, then let's go ahead and take a small position. And the risk where we're willing to go was if it fell below 17, which is just below this low here, we'll be out of the trade. And as you can see, what happened was is that on the 28th, it came down and triggered the trade. We got into it at $17.80. But in the same day, this trade, once I entered here, it triggered my conditional trade. This trade triggered my conditional trade that worked out later in the end of the day, prior to the end of the day, where it was up 10%. So it closed half the position at 1978 for a nice profit of $495. And my next target, T1, is up here close to either the falling. This is the 100 or 200-day moving average. Yeah, this is the 100-day moving average. The falling 100-day average somewhere in this area here, or at the trend line itself. Tracy asked a good question. How many times can Nugget hit the lower range before everybody knows it? The people who are following it, Tracy, the majority of them probably already know it. I think that with Nugget, a lot of people will stay away from Nugget and they won't put the time in to analyze it to say, okay, where's a logical or where's a good place to enter a trade on this and what's my risk? Because it is such a big mover and very volatile. Because I mean, it moves from 18 up to 24. Well, that's a what, $6 move? Yeah, $6 move. And so 6 divided by 18, that's, what is that? 40% or more? I'm doing my math. Hold on. Yeah, 33%. Thank you. Thanks, Barry. And so one of the things that is happening, though, as we watch this, this tightening here on this symmetric triangle, and if we were to draw this on out here to where it would, typically these triangles will break out of either one side or the other by the time it gets 2/3 to the apex. So if I wanted to, I could extend this on out to wherever the apex out here, excuse my guessing. Well, let's say this is where the apex is, and it's out about here. And we just take a look at that. Well, that is probably going to be out in, this area out here will probably be out in, let's say, another month and a half or so. So that would put us in mid-November. And so we would anticipate, if we're going to go through 2/3, that somewhere around this area is where we would expect a break, either down or up. If it continues to kind of hammer into here, it becomes kind of meaningless out here. You may get your break, but it makes it a little bit more challenging to watch. So I hope that answers your question, Taylor. What are the probabilities that it goes up or down? Because we're looking at a entity, okay, this is based off the gold miners. There's a seasonality to gold miners that towards the first part of November to the midsection of December, they tend to go up. So I'm kind of trying to position ourselves so that we'll be ready. Position ourselves to be ready for that surge that moves up. When's it going to happen, or if it will happen? Not necessarily sure, but it's happened. We've gotten a surge every year, past that. Now, one of the things with the long trade on this is basically, if we fall back to, right now, if it falls back to where we bought it at, I'm out. And we'll take, the profits on the partial trade. Because we've got that other strategy 2, or strategy 3 system trade working on it also, where we're selling premium against the long leaps, and those leaps are all the way out in 2018. And so, yeah, typically, yeah, great question. Tracy clarified with the aspect of if we break out the top, it will, tend to stay above it, and oftentimes it'll come back and retest against that breakout area. And so as you can see, is if we break out here and it comes back, let me get rid of some of these lines. And I will answer your question. Let's say it goes up here and breaks out here, moves on up to 26, let's say, and then floats back down sometimes it will float back down and retest that breakout. But because of the downsloping line, the retest is actually going to be at a price lower than it was when it broke out. So we'll be watching for that. And then it will rebound off of that and can go on to make higher highs. Now, with Nugget, what is very interesting about it, I mean, when it gets on a tear, it can run, as I said, somewhere, 30% or more very, very, very quickly. And so I'm not trying to get necessarily the whole move. I'm just going to be happy with with a 15, 20, 25% move. Take a little bit of profit out as we go. And so anyway, that's the plan of attack we're doing on it. We're looking at for seasonality, a rally going into the end of the year, and secondly, looking for somewhere between that 10 to 20, 25% return on the pieces that I do hold. So did I beat that dead horse enough? Okay, thanks. And I'm just bringing up, this is strategy 3 that we did on Tesla. I've talked about it before. On a portion of this that we opened back in September of last year, we hit 100% at the last part of August this year, where basically the residual value of the 2 leaps that we had, plus what we had gained in profits combined over every week, we hit the 100% mark. And what that means is basically the capital we invested, a little bit over $9,000. We made this $9,000 back, must made another $9,000 since September the year before. The reason I left this slide in, I'm going to take it out after this week, is at this week's Bay Area Moneymaker, I'm going to be talking about income generating trades. When we were out and about, driving around the countryside, my wife and I on the little month-long road trip we did, we ran into a couple of friends, and one of them is one of the friends basically is living off Social Security, would like to make an additional, would like to earn additional $500 a month. It would make life so much easier. However, the concern is, well, if I make more money, it'll cost me more for my health insurance. Like the person's health insurance would go up from $35 up to almost $100. And the thing about it is they may not be thinking it totally through, because even if my health insurance goes up by let's say $60 per month, but I'm making an extra $500 a month, I still get to keep $440 of that, right? So I'm going to be talking about standing up and doing the income generating trades, because I know that a lot of folks in my age group who are looking down the barrel of both Social Security, fixed income, and all that type of thing, is that if you can learn how to just generate a little bit of extra every month and do it on a weekly basis, it can really make a big difference to their quality of life. But in a lot of cases, they just have to do the math to find out and say, okay, I can make this work. And recognize that, if I make a little bit, it might cost me a little bit more for health insurance or something like that, but the delta still is a big positive in my favor. So that's what I'm going to be talking about primarily at the BAM meeting tomorrow at 9 o'clock. Next week's training session, Wednesday, strategic planning, putting it all together. And then just a reminder for everybody is the active trend trading system is based on the 5 pillars of active trend trading. We show people what to trade, top quality IBD stocks, index ETFs, when to enter, when to exit, what strategy we're going to use, and what to expect from that strategy. My big push is that I believe that oftentimes people get so involved trading strategies, they forget that each strategy has to be based on a real solid foundation of a good system. And I think, so I want to, before I sign off for the week, I just want to, share with everybody, and hopefully on our on the 27th, I put out this traders report, and I know that not everybody is a premium member, but or an early warning alert member, but I put out this. There we go. On the 27th, I put out this report, and it basically just gives you an update of what's going on with market, what I'm seeing. Gives a nice view of, okay, here's what the market's doing, indexes and all kind of stuff. But one of the things and then managing existing trades, we tell exactly how we're managing existing trades, where their stops are. And one of the things that I've been really contemplating with is, in the past, I have just basically provided a list of stocks. Here's what, I'm looking at this week. But I've been led to put together, and this will go into effect, in full effect, next week after I get back to Hawaii, is provide at least one and maybe up to 4 stocks or even 5 stocks where we've got the setup ready at the during the week or at over the weekend, and I'll highlight it like this. Okay, Nugget. I explain what Nugget is, and basically it's a 3-time leveraged ETF. It is very volatile and can move up and down in excess of 20% in just a few days. The price action appears to be coming down to test the support at the bottom of consolidation triangle. This is just above the 200-day moving average. And then I basically explain, okay, let's try to enter this between $17.60 and $18 with an upside target of about $21 to $23 with a stop loss below 17. If I buy at 17, a stop loss at 17 would equal about 5.5. So I would size my. So okay, great, Tracy. That's what I was after. Is it helping you plan? And then I went ahead and I showed because it takes a lot of time to do each one of these. So that's why, if I can identify 1 or 2 or maybe up to 4 every week, it would definitely give you, a target. And here's the chart. And this was, as I said, on the 27th. And I said support level, identified what levels it was at. And then basically the next morning followed it with the text alert and the email alert. And so far we're still in the trade. So one person found it helpful. But doing this rather than necessarily just listing a whole bunch of stocks, and that way you can see what I'm looking at. And so anyway, I just wanted to get some feedback on that. Okay, thanks, Gary. Thanks, Eric. Eric asked a great question, and that makes a good segue, Eric, into, let's take a look at some charts for a couple of minutes. Where are we at? Okay, 11:49. So see you next week. Keep your egg growing, trade wisely. And so, but yeah, thanks for that feedback on that. And that shows up when you get the market update, throughout the week. That shows up on the website. In other words, you get I give a little bit overview on what the S&P is doing, what the indexes are doing, but then there's a link that'll take you to the website for you to go take a look at. And so, yeah, Barry asked the question, has anybody done a study on, how well the markets do in the, last couple of days of the quarters? due to window dressing. I'm sure they have, Barry. But I'm not per se familiar with one, the studies, but there's kind of like a rule of thumb. We know that that last couple of days of each quarter, there's a tendency, a bias for the market to accelerate and go up. So let's go back to Eric. Eric asked the question, would we get back into Juno? There we go. Or what would cause us to get back into Juno? Juno had a really nice surge up here. It is basically still within this nice little uptrend. Here's it pushed out of the retracement. We can actually get rid of this now. Or actually, just, I know you were on the Wednesday night training, Eric. You actually draw another retracement in here and see how, see if any of these lines, levels match up, or do give you extra thought about that. But yeah, if we get, look at over here on the weekly chart, and as long as that, that 2793 remains intact, or even down to 2721, if that remains intact, we could look for a potential bounce off of that to move higher. As you can see, it came up, hit its head on the weekly 20, which was really, kind of not a shock, but it came up and bounced. This is making the initial part of a nice move. Eric brought up earlier the concept of a double bottom. And this is kind of a double bottom. What's our distance here? Yeah, let's see what kind of. Okay, we're right about 20%, so it corresponds with what would be considered a traditional potential double bottom. Potential only at this point because it still needs to take out that high up here at about 35. And I'll be watching this candle here. I would, and to see if we get this little hammer to break back above the moving averages, it's in the very early stages of a potential consolidation pattern that could take it back up to its old highs, which is back up here in the 45 to 50 range. And so a $30 up to $45, that wouldn't be a bad move. And so, Barry, that's a great point. Barry says, well, the second bottom doesn't undercut the first bottom. You're absolutely right. It is about 50 to 75 cents difference between this bottom over here and this bottom over here. Maybe it's not quite that much. There's 27.13, 27.73, so we're about, 60 cents or so. But a traditional technical double bottom is not the same thing as an IBD double bottom. The IBD double bottom requires that this bottom here undercuts this bottom here and then moves back up. With a traditional, it's basically a proximity. If it gets into a trading or a level of support where, we've got, 50 cents difference, 60 cents difference between the two, that is, you could still consider that a double bottom. Now some people say, no, it's got to be exactly right to the dime or right to the penny, which would mean it would have to get all the way down to 27.15. But if anything, we could go, well, this is a higher low, and if it takes out that higher high, then we're back into an uptrend. So, okay, Juno, did we kill Juno enough there? TWLO. This is a newer entity. I would want to run the market checkup on it, of course, to see what kind of fundamentals it has. It is up here. It has reached a a level. What does this? What does this company do? Who asked about this one? Gino. No, it's calm. And so it does put in pretty nice pattern, Gino. It's got really good daily volume. Now that the daily volume is starting to show up. If anything, and it has, recently broken out. Looks like it wants to do a little bit of a pullback, selling off into this. A couple of ways you can look at doing this is just connect these lows here. And as long as it stays above that, your uptrend is in good shape. But it's looking like it wants to come back here and maybe test it to 20 before it moves higher. Any idea on what they do, Gino? Baker Hughes. Baker Hughes stuck in a really nice little trading channel. Okay, cool. Chinese internet company. Between 48 and up here at 52-ish. But then, yeah, nice little scoop that it's putting in here. And it's, progressing up. I like this aspect of this. Over the last few days, we've gotten those two big buy signal, not buy signals, but volume increases. That shows somebody's collecting this. It does have, some resistance in here at around the $51 level. So to me, this looks attractive in a couple of places. One, on a pullback into the moving average cluster to move higher, but it's got to break out above that 51 level before it can go back here up here and test in the 52 level. And it too has been, was in a downturn. There you go. On a larger perspective, significant downtrend. It has moved back up, had a shakeout off of these lows over here, and is, again, it looks like it is in the early stages of wanting to, go back into a nice growth trajectory. Yeah, what's cyber doing, Tracy? Okay. Okay. Cyber appear. Okay, we haven't turned positive on it yet, but we're coming back down here to test into this zone down here, let's say between 49.51 and 48.71. So in this area, if it gets all the way down into this area, we've got some nice positive divergence going here. As you can see, as it's selling off from here to here, the volume is quite low, and so that's a positive. That means the selling has slowed down a little bit. Cyber looks much better on this weekly chart than it does per se on the daily chart. And I think we ran the fibs both ways here and here. We could also run the fibs on, just to give us an idea, let's run the fibs from this low up to that high, which that's approximately where it's at. And isn't that interesting, is that it basically, this area here turns out to be the 38% retracement off of this move from here to here. And so you got a double up there. So we know that we're sitting about at really good, strong support. But right now we don't know if it's going to hold. And so the big questions we have to ask is, we need some kind of reversal candle, or we need it to get, for what I'm looking at, I'd like to see it actually get closer to that and then reverse higher. Now, if it takes out the high of this day and goes back above the 8-day, it may be on its way. But you can lay out your trade from there. You've got a nice swing low here, so you know if it drops below that, you'd want to be out of your trade. And then you just do the math to figure out, okay, how much can I afford? If I take a trade in here, how much can I afford to trade, or how much can I afford to lose if it drops down below this by 25 to 50 cents? Okay. Yeah. Karen wants to do Nugget real quick. Okay. Nugget is still operating within this symmetric triangle. And it is, it came down here and tested here, has not come back down to retest or anything like that. And so it's actually at the Keltner channel, and no, it's not the Keltner, this is the 10% moving average envelope. It's there and it's holding right now, and we'll see if it continues to hold and push its way back up. As you can see, it got all the way up to 2063 this morning. And so on that particular candle, Karen, I don't think I would necessarily place a trade on that because there's nothing that I can really draw in there to find, a level of support. I would like to see some else. At a descending triangle. This, now I call that more of a symmetric triangle, but it could wind up also to be a, let me get rid of that. It could also turn out to be a flag or a pennant type pattern. Unfortunately, that would be a downside pennant, and so you'd be expecting to break out the downside back into this level here. Now that would go against what it has typically done in the past, where you get that little bit of an upsurge going into October, and then latter part of November into December. And you might think, oh my gosh, well, that's not very much of a move from, when it made its November move last year. Well, that was 36%. So, okay, guys, I'm going to call it a day. And my wife and I are doing laundry and packing up and getting ready to. So, Bob, look forward to seeing you tomorrow. If you are in the Bay Area tomorrow, though, come by the Masonic, San Jose Masonic, and we'll be doing the BAM Bay Area Moneymakers from there. Thanks, guys, and we'll be look for the traders report. And I'm thank you so much for the feedback about those specific trade details that I provided within the market update during the week. So have a great weekend, and God bless everybody. Bye-bye.